It's about that time of day again. My name is Joseph. Thursday evening, June 28th. Welcome back to your nightly newsletter. My job is to help new traders earn consistent profits using a simple and reliable trading strategy. And my plan this evening is to identify the most reliable trading opportunities, setting up for tomorrow's trading session. Tonight, I'm going to cover crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude oil is bullish with a flag pattern tonight, so I'm looking for buying opportunities with a breakout pullback above the high. But I'm also watching for a possible failure of this flag and a potential selling opportunity if I get the right signal tomorrow morning. We'll dive into that signal in just a few moments. The S&P is bullish and rotating back into the range from earlier this week. Surprise, surprise there. And my goal is to participate in this pendulum swinging higher with buying opportunities using a key support trend line waiting just below the low of the range. Nasdaq is also bullish as it too heads back into the range, as predictable as that was this week. And my plan is to use a hidden channel for buying opportunities as the pendulum swings back in the direction of the bulls. The gold is bearish tonight. Yep, still bearish. We've been bearish for a while now on the yellow metal, and I have my eyes on selling opportunities at the high of a weekly channel tomorrow morning. We'll take a look at the gold market in just a moment. And of course, we can't forget about the euro. The euro is bearish with a trading range this evening, and that tells me to look for selling opportunities using buyer failures up above those range highs tomorrow. Well, we're ready to wrap up the month tomorrow, ready to wrap up the week tomorrow. We got end of week, we got end of month, we got a couple range-bound markets, couple strong trending markets. We got a whole collection of different stuff to talk about here tonight. And as always, I've got a great newsletter in store with plenty of reliable trading opportunities setting up for Friday's session. Before we jump in, though, I do need to remind you, if you're watching me tonight on YouTube, you can find a detailed description of this entire strategy written out here on my blog at sidewaysmarkets.com. I'll leave the link in the description of this YouTube video. Also, if you have any questions about anything covered in tonight's video, please remember to post those questions in the comment section below. And if you like what you see, please help support this channel by subscribing and make sure you hit the bell icon so you get notified every time I post another video. And don't forget, if you really want to stay in tune with everything we do here at School of Trade, head over to sidewaysmarkets.com. This is where all the action happens every day, and make sure you join our mailing list. In the upper left-hand corner, all I need is your name and your email address, and I'll send you an email every evening when I publish something new. Also, don't forget, if you're hanging out on social during the day or in the evenings, weekends, whenever, right, don't forget I'm always posting exclusive content, charts, links, quotes, videos, all kinds of great stuff that I personally use every day. If you're on social, find me on StockTwits, Twitter, Facebook, LinkedIn, whatever your favorite flavor of choice in the lower left-hand corner. And speaking of charts, how easy is this? All the charts from tonight's video, you can have them ready on your computer for tomorrow. So be ready for tomorrow. Grab those charts, follow that link below the video tonight. And speaking of tomorrow, right? Speaking of tomorrow, just a heads up on this, get a free pass for you guys. If you're not a member here at School of Trade and you'd like to get a free pass, come out and join me in our trade room as a guest. Get a deeper dive into this trading strategy we talk about every night on our newsletter. Make sure you grab that free pass in the upper right-hand corner. And don't forget, you can always post your questions in the comment section below, but I'm always here as well. You can always use live support on the right-hand side if you have any questions along the way. All right, hope you guys have had a great week. Boy, it's been a great week here. Last week of the month, last few days of the month. Now, I don't want to sound like a broken record, but let's say it again, right? So we're going into the end of the month of June, the end of the week, right? End of the month, end of the week. What do we always talk about on a Friday? There are two important things we always talk about. First, right, early in, early out, right? Early in, early out. Those are definitely, right, big important things for tomorrow. You know, Fridays are a day where, well, let's put it this way. You can expect bigger risk taking, right? Let's just say you had a great week this week. You're way up on the account, right? You're going to be a lot looser on following those rules, right? More risk tolerant, right? What if you lost a lot of money this week? Well, now you're trying to dig yourself right out of that hole. And again, you'll be more risk tolerant, probably more right advantageous for risk if you put yourself in a hole this week as well. So traders who are either trading high on emotion, right, or low on fear and pain and suffering, right, they tend to put more risk out there in the markets on Friday. And as the day gets later, what happens is you have professionals, right, people who know what they're doing. They've been doing this for a long time, right? They've already made their money, this week, and so they're not going to give it that much wiggle room on Friday afternoon, right? They're going to cut that pretty quick. So when you combine, rookie, retail, inexperienced traders who are riding high or riding low on emotions, combine that with the professionals leaving early because they've earned the right to do that, right? They're not nickel and diming, right, every day, right? You get this low volume, really high volatility environment, and it really can be a recipe for disaster if you don't know what you're doing. So my best advice and what I do every day in my trade on Friday mornings is I go early in, early out. I start watching market personality closely after 10:30, knowing that really that you've got to have a really good reason to be entering into new positions, taking on more risk after 11 o'clock on Friday. What else do we talk about? Prior week open, high, low, close levels, right? It's Friday. So this Friday, we start watching last week's open, high, low, close levels. Now, in combination with this, tomorrow is also going to be the end of the month. It's not the official end of the month, it's the last trading day of the month of June. So everything we've talked about, right? Traders who are riding high, traders who are riding low, right? And professionals getting out of the office early on, right, on Friday. That is even more compounded now because it's the end of the month. So now we have such a dramatic impact now of this end of the week and the end of the month, right? And next week we've got 4th of July, right? Next Wednesday. So I wouldn't be surprised if quite a few traders take off early tomorrow as well. So we know that early in, early out is really important. Prior week open, high, low, close, but also don't forget it's going to be prior month open, high, low, close levels as well. And what you want to remember is those open, high, low, and closing prices of last week and last month, they become excellent price magnets for targets. They make excellent levels of support and resistance. You'll see a couple of them on the charts tonight. And so we'll definitely be watching those closely right here tonight on the newsletter and tomorrow in the trade room. Now, as far as news goes tomorrow, there's actually some news scheduled tomorrow. We've got the personal income and outlays tomorrow at 8:30 Eastern time. That's always a pretty big market moving event. So we'll look for that tomorrow, 8:30 Eastern time. Don't forget, we also have that ECB summit, right? There was a lot of controversy today, right? The Italians didn't quite agree with the rest of the EU agreements. And so we'll see if that gets, dusted up tomorrow. So we'll see what tomorrow brings as far as headlines regarding the EU summit. We talked about this last night, but we're expecting that gold and euro are going to be a little bit more affected tomorrow by that EU summit, right? Hopefully not that bad, right? But, Fridays, summer Fridays, end of the month, end of the week, tomorrow has potential to be a very volatile day at times, but that window coming closed real quickly, right? The volume can dry up pretty fast. So get to it early. Again, we expect to see a little bit more volatility. We expect to see less liquidity, right? Because of the end of the week, end of the month combination. And again, we'll see how that EU summit, starts to bleed into gold and euro tomorrow as well. Now, don't forget, guys, right? I've gone over a lot tonight. I don't expect you to know everything here or remember everything. Don't forget, tomorrow morning we'll be in our trade room, 8 o'clock Eastern time, and we'll do it all together, right? We'll execute this plan together with each one of you guys tomorrow morning, 8 o'clock Eastern time. All right, let's grab some charts here right now. I'm going to go crude oil, S&P, Nasdaq, gold, and of course we'll wrap up tonight on the euro. How about some crude? Crude is bullish, just a little bit bullisher today, with a flag pattern tonight. And that flag pattern tells me the buyers have control. but they're rejecting these higher prices. We can see buyers already tried buying the dip below the flag, and that didn't work very well. So the only option available at this point is to get above this trend line, right, for what we call a breakout pullback pattern. It's also important to remember that flags have a tendency to fail if the buyers can't get this momentum going higher again soon. Usually they try twice, usually on flags, they try 3 times on flags. And if they fail, I assume we're headed back into the range we started from earlier this week. Now, the easiest way to get short is to wait for the next bullish spike and then watch how it reacts to the moving average. If I see sellers completely smack this back lower after a spike higher, I know we're headed back down to that 72, and I'll start looking for selling opportunities on the way down. But if we see strong buyers without any sellers defending the move higher, then we know the buyers, right, can buy that pullback for a retest of those highs. So looking at the chart here tonight, a lot of this we have to go up, back out a little bit here and get a good picture of what's happening here, right? We talked about this last night, right? We got a big, strong move up, obviously, starting on Tuesday, right, into Wednesday. And as you can see, right, we're definitely still bullish. We haven't turned bearish yet, but this is definitely not the same type of strong trend that we saw in the previous 2 days. Not a huge surprise because, again, we're up around those prior month highs, right? This is nothing new. We were there yesterday too, right? So prior month highs, we know that the end of the month is tomorrow, and we know these areas become price magnets, right? We know they become, right, sticky areas here on the chart. So as I zoom in now, we get a strong move up, a pullback, strong move up. I've got this marked up now as a channel, right? Pretty much a spike in channel, as we call them. And I'm looking for a buy off the low of this channel, right? Look to buy off that low on the way back up to retest that high, and then potentially up to a two-legged measured move target waiting overhead. The other aspects of this chart, though, you can see we have trading range here. That's a big, big clue. Went up, pulled back, went up, pulled back, went up. Yep, that's double tops. That's double bottoms. That's a flat moving average. That's definitely a trading range. And then, of course, right, a trading range would tell me that if we can't hold here, we're going to swing back in the opposite direction, right? And that's a very nice selling opportunity if we can get the proper signal, which I'll talk about in just a moment. I think this all boils down to, though, guys, this strong spike up into what we call a flag pattern. Now, flag patterns are relatively rare when it comes to liquid markets. We don't see them as often as you would think. They are one of the 4 patterns we look for when it comes to a spike, right? We see a spike and channel, a spike and wedge, right? A spike and range, which we also have here, and then, of course, a spike and flag. Right? So a spike and flag, or a flag pattern as it's called. Flag patterns, there are typically going to be 2 ways to trade a flag pattern. Typically, you're going to see 3 attempts. 1, 2, and 3, right? The magic number is usually 1, 2, 3, and if they can't, right, at that point we usually see some sort of kind of spike and then collapse back down, and they're known among traders, right, as failed flags, right, or false flags, right, if you will, right, or the final failed flag, right, from some, right, price action people you'll notice on YouTube. So we definitely are anticipating a flag, but we also know that there's always that potential. These flags can fail, right, because what's happening is there's that resistance trend line, right, coming down overhead, right? That's the problem. There's that resistance trend overhead. Okay, so the bottom line is, right, there really are a couple ways to trade this. One is going to be I've got to get below that low, and I got to buy low. And this takes some guts. I will definitely tell you. This is definitely the hardest trade to take because you're basically buying in free fall. The market gives a nice strong pullback, you're trying to buy. And the reason why folks will buy there is because they don't want to buy into this level of resistance. Now, a much more palatable buy, or much more, easier on the emotions, is to wait for what's called a breakout pullback, right? We break out, we pull back, and we go, right? You're looking to buy off of basically the high of that, right, of that channel. right? Makes sense? So these are the two spots, right, that you can look for a buy. And then obviously here, this becomes the A, B, C, D, right? That becomes our target for a symmetrical measured move. So when I go back to my chart now, we know kind of different aspects of this now. We'll go back to our chart. Strong move up, pull back off the high. You can see they already tried to buy low, right? That's what I mean, right? They already tried to buy low. You can already see that, right? The buyers tried, and they're just not really getting anywhere, right? Every time they go above the moving average, the bears are coming back in to take it back lower. So I've got the top of my flag pattern drawn overhead, and really what I need is I need to see a strong move up, right? And then look for that pullback, right, to hold here. In other words, I want to see strength going higher, but then I want to see a pullback, right? Pull back to the moving average, back to the top of the channel, right? And then buy it up from there, right? So I want to try to use this trend line support. I want to try to use the top of that channel, right? And be a buyer, right, on the pullback. Right now, where that sell will come from is if we see this market go up and then immediately get sold. Right? And trust me, with these flag patterns, what you'll see is you'll see it basically do this. It'll either go up, right, and it will hold at the moving average, right? Red candle, but the red candle holds. Okay, that's your cue now that buyers are looking to buy this thing. Make sense? Okay, or do you see it go up and you see it just pummel, right? Bam. That right there, that's a failed flag, okay? Nobody's buying it, and once I see that tomorrow now, right, once we see that tomorrow, then we know, right, we're going up, slamming lower, and we're ultimately trying to sell off that, right, off that trend line now, either off that trend line and down or off that trend line and down, okay, depending on what type of signal, right, that we get. So again, it all starts with up. Do we hold and go, right? Or do we go up and slam back down? That's going to be the big clue, right, for that tomorrow. Now, hey, maybe we don't even go higher, right? Maybe we just slam lower, right? That's a definite possibility because, again, we've got that trading range. And you can see as we go higher here, right? We talked about this last night, right? One try, two try, right? If they fail, slamming it lower, right? Well, flag patterns, one try, two try, three tries, it's coming, right? It's coming. Now, I'm covering a lot so far in this video, right? A breakout pullback pattern, right? Holding the candlesticks, failure patterns, etc., etc. If you're here for the first time right now, I want to give you a big shortcut, a big head start, and really something that I wish I would have had access to when I was a new trader. In the upper right-hand corner, I'm going to put a free trading course up here. And the bottom line is I don't have a lot of extra time in this newsletter to go over all the terms, all the tactics I use every day. So to give you kind of a more of a shortcut, a deeper dive into this, and just to, in an essence, saving time right now, grab that free course in the upper right-hand corner. That will make it easy for you to make the most out of our time together, and you'll know exactly what it's like to be with me every day, right, in my trade room. So pause the video if you have to, grab that free course, make sure you get registered. If you have any trouble, shoot me an email, call the office, right? I'll make sure to help you guys out with that. But I want you guys to have that deeper dive, right, into all the terminology, all the patterns I use, right, et cetera, et cetera. All right? So we know if price goes up, right? Price goes up, I'm looking for that hold and go. Or price goes up, slamming down and then selling high, right, off of that trend line. Now, what if price just collapses? Right? What if price just collapses here? Well, if it collapses, now we're going back into that prior month high. Okay, now we're going back into that prior month high. Remember, I don't want to chase after it. I'm going to be careful selling around that area because it's probably going to get pretty choppy. You can see how choppy it was already. So if we do see it collapse, keep your eyes open on that trend line. Keep your eyes open on this resistance level, and we look for that sell up overhead. Okay, that's going to require some discipline. It's not going to be that easy, right? Because it's going to feel like this market's never coming back. Okay, so you got to wait for that move up off of that high. Then, okay, so that's how we sell short on the way down. I would assume at this point, if we can fail, right, if we can fail here and go back running lower now, I'm going to assume here we're going to find probably 1, 2, 3, right? Some real strong moves there. Find that new channel bring that down overhead, and then focus on selling, right, up near the high of the range, right, and the high of that channel, right? Just like we talked about last night on the euro and on gold, right? We wanted to sell high if the market kept, right, collapsing back down, okay? Now, we get back down, right? Let's just say now we go 1, 2, 3, we run. Now here we are back at the low of this range now. Okay, back at the low of the range here. Again, we know the plan, right? If price goes up, right? We're trying to get up to the top of that range, right? Holding that moving average breakout pullback style, right? We know that's the plan as we go higher. If we collapse back down, remember the momentum is going to be too strong to buy down here. So I'm looking for another attempt from the sellers, and then we'll look for that move now. Strength, pullback, strength, and back up we go, back up into that range. Okay, so we have a trading range here. Okay, pendulum swings up, pendulum swings down. If we get that pendulum to swing through, do not try to buy it. Okay, and be careful trying to sell it as well, because you're going to be below the low of that range. I'm going to let that moving average come over, let those bears try again. Then here's the key. If we continue going lower, this market turns even more bearish, and we look for continuation. If we see it run higher, now we know it's going back to that prior month level, and we're looking to buy that pullback right on the way back up again. All right, guys? So this could get really good tomorrow for the bears. It could also be a pretty good run here for the bulls. Again, we know the plan for the bulls. We get the plan for the bears. Right now, all we need to see is what we get. Let's keep going. How about some S&P here right now? S&P, gorgeous, right? We talked about this plan last night. If you watched last night's newsletter, you were locked and loaded for a great day today. Just keep selling high, right? Keep selling high, keep selling high. And then we saw, right? Then we saw that beautiful, right? 1, 2, 3 reversal. Find that new channel, right? And buy off of that low. I mean, what a great way to finish up, right, that S&P. So the S&P is bullish and headed back into the range. So I'm looking for buying opportunities at support levels, and I have my eye on a reversal line and support trend line for entry patterns tomorrow morning. The only variable really for tomorrow is how to handle a move higher. If it's strong, I look for buying opportunities for another leg higher. But if it's weak to the upside, right, I'm looking to sell with buyer failures going back into the range again. So here we are now on the S&P. Let's get this out of the way here just for a second, right? And if you recall earlier this week, right, we spent some time chopping around here inside of that range, right? We talked about buying low. We talked about selling high, right? And of course, last night in the newsletter, we had that strong momentum, right? So we talked about selling up above those highs, right? And as we go lower, selling as the market went higher. Well, now that momentum has dried up, right? And now we're headed back into that trading range again, right? We see that strength, pullback strength. That tells us now the bulls have it. We find that high off of that low, and sure enough, right, we've got that beautiful buy, right, coming off of that low. Buyers run the price higher now. I'm looking to be a buyer as this momentum continues to push higher here. We'll zoom in a little bit closer here now, right? I want to be a buyer as we try to get that pendulum swinging, right, on both sides, right? There's your trading range. Again, this is kind of piggybacking on what we've done so far this week, right? We have our pendulum swings down. We have our pendulum swings higher. Again, if you want to learn more about the pendulum swing strategy, right, grab that free trading course in the upper right-hand corner. There's an information icon up there. Grab the information icon, and you'll learn more about pendulum swings. We do see those quite often. We do use those all the time in our trade room. And so again, we know momentum now is moving higher, right? The only question we have right now is how do we trade around this range? So we know momentum's moving higher, right? And we know that we don't want to buy into the high of the range, right? We don't want to buy into that high. So really what we're looking for right now is to be a buyer. I'm looking for one of two things. I want to either see a little bit deeper pullback so I can buy below the range low, or I'm going to have to see another strong move higher here. If we can see a strong move higher, well, then I can count on being a buyer as it pulls back. If the move higher is very weak, though, then I can't really be so sure because it's a range high, right? Let's not forget, we don't want to buy above the top of a range. So I want to buy at support. What are two ways to do it? Let's take those two highs. Let's bring it down to that low, right? And that creates a support trend line, right? In all reality, though, what I really like is this trend line right there. That's the one I really hope that we get a chance to trade off tomorrow, because if you look closely at it, it also lines up beautifully here with this reversal line. This is a prior high, right, that will hopefully be given to use, right, for a buy here tomorrow, right? That would be the sweet spot, right around that 27.14 area there. So that would be great if we get a pullback there, right? Pull back down to that level of support. And what it will probably look like is, as we go lower, we're most likely here going to see the moving average be above. Okay, whenever we're bullish and we see the moving average, we're below the moving average, we assume you're going to see sellers who will try to reverse that trend. Okay, the problem is we're bullish right now, and a reversal is probably not going to happen. The odds aren't very good for the reversal. So what I'll do is I'll wait for those sellers to try to sell that move short. That will tell me now where their stop losses are going to be, right? And then I can buy into their stops. Now, I don't want to buy higher here, though, so now what I'll do is I'll wait for price to pull back, and I'll try to buy as close to the low of that range. Does that make sense? Right? So I'm looking for a seller failure, one try, two try, below the moving average, seller failure into buyer strength. Buyer strength, don't chase after it, wait to buy. And again, you want to try to buy as low as possible, right, down to the low of that range. Remember, when it comes to a range, the closer you can get buying the low, the better. Okay, so that's if price pulls back. Now, another thing you want to keep in mind for tomorrow, if we start getting stuck inside this range, okay, we now want to be very, very careful trying to do anything above the range. Okay, if we start going sideways here, we get a bull market into a range. We're going to keep focused on buying low, right? If we're going to buy low, how do we do that? One try, two try, failure, strength, pull back, and back in. One try, two try, right? That failure leads to strength. We'll look to buy that failure. We'll look to buy that pullback, right? Staying it close, as close to the low of that trading range, right? So that's if we go sideways. Okay, another scenario you've got to be thinking for tomorrow is, what if this thing, one leg, what if this thing just blasts, right? What if it just launches going higher? Well, at this point now, momentum will firmly be in the hands of the buyers. And even though, right, even though we have a range-bound market, just like we said last night, right? Remember last night's newsletter? We were down here below the range, and we said, you know what? Even though eventually I do expect it to go back into the range, we're still probably going to get a chance, right, to sell high. We're still probably going to get a chance, right, to sell high as it goes lower, because the momentum at that point, right, was too strong. That's the same type of thing, right, we're looking for tomorrow. So as we go, again, if we go launching higher here, draw up that trend line, bring it up off that low, right? Again, assuming there's a new high there, and look to be a buyer down around that low. Now, all you're really going to be able to get is that pullback and run, right? Because once we get up here, then we want to start looking at consolidation and eventually a move, right, back down into that trading range. So once again, we're looking to buy the deep pullback and back up. Right? We're looking to, if we go sideways here inside this range, 1, 2, failure, back up, right? If we run, right? If we run, pull back, second leg, right? And again, the objective here will be up to that pendulum swing, because again, we saw the pendulum swing down, pendulum swing back up. Okay, be very careful though if this thing goes up and comes back down in, right? Nah, that's not enough, right? I want to see it bam, right? Big, big, strong, juicy move higher, right? Something you can really wrap your arms around. If we want to see something looks like this, right? I want to see something like that. I want to see a big, strong move. Then we go, oh, perfect. Now let's buy that next pullback. Let's buy low, because we should have one more, right, leg going higher, right? Now, how do we sell this thing? right? Couple options here. Strength, pullback, strength. If we see a strong 1, 2, 3 reversal, right, then we know new channel, right? Sell off the high. Just make sure you're not selling into that low, right? Just don't sell into that low. Okay. Also, too, if we end up getting stuck in the mud, right, in this range, then we're back to basics, right? We can sell high. 1 try, 2 try, failure back down, right? So don't be afraid to sell this market with a 2 try rule, right? Again, 1 try, 2 try, failure back down. Again, to learn more about 2 tries, upper right-hand corner, grab that free trading course, right? It's only if the market runs, right? If it runs, then we got to follow that momentum, right? Promise me you're not going to try to sell into a freight train, right, as it goes higher, right? We don't want to try to sell into a freight train. All right, now Nasdaq. Nasdaq's in a very similar position as the S&P. We're bullish. We're rotating back to the range where the week began. So I'm looking for buying opportunities to capitalize on this move. And I can see a hidden channel and a support trend line that I can use for buying at support, right? Now, it's been a really busy week here for this range, right? Same thing as the S&P. We had that range. We saw a great example of the pendulum swing in yesterday's session, right? That led to that tank right back down. We had that strong momentum lower, right? We talked about the fact that we're probably getting a chance to sell high, sell high, sell high. But eventually, though, the buyers were able to take this back over. Strong move up, pull back, right? Strong move higher again. This market is now bullish. What I'm going to do is I'm going to take these highs down to these lows, right, and create that new channel. I want to buy off the low of that channel. At the same time, right, I'm lining up that trend line. That would even be better, even deeper pullback down to that trend line. Okay, so the market's bullish right now. Where's the objective? The objective right now is just to get back to the high of that range at 71.05. If they can get through the high on some strength here, then the pendulum swing is their objective at 72.09. Okay, so same type of situation we saw on the S&P. I'd like to see us pull back. If we pull back, we'll be below the moving average. Being below the moving average, you're going to see sellers, right, try to take this thing lower. If they're successful, we look for the run and we sell them with it, right? But if they're not successful, though, which, again, the odds are not in their favor right now, we look for buying opportunities into where those sellers are going to get stopped out. That stop run for the bears will lead to bullish strength going higher. We don't chase the move higher. We wait for a pullback to support. Remember, I don't care what you do here, for what type of patterns, you're always going to make more reliable trades if you always focus on going with the momentum, and if the momentum is bullish, buying at a level of support. Okay? Now, what if we go sideways here, right? What if this turns out to be a sideways range, right? Double tops, double bottoms. If that's the case, 1 try, 2 try, failure back up, right? 2 try rule. 1 try, 2 try, failure back up. Okay, so if we go sideways, or if we go up and then start going sideways here, same thing, right? Bullish bias to it, 1 try, 2 try, buy back up, right? Remember, focus on buying as close to the low, if not below the low of that range as possible. Okay, now remember, there's also that other scenario here where price could keep grinding higher, right? Price keeps grinding higher, right? Grinding higher, right? Almost like a spike in channel. Okay, find that spike in channel, find those lows. Try to get in as close to the low of that range as possible, right? For example, right, find that prior swing, and we look to buy down below that low. Okay, so if price goes higher here, right? Now, maybe we get a big strong move, right? Maybe it really jumps. Maybe it really jumps, right? If we see this thing blammo, right? If it really spikes higher, right? Spikes so strong, it looks like this, right? It looks like this. It's a big, strong, right? Strong move, bam, right? If that's the case, new channel, right? New channel, and look for that buy off of that low, right? You're almost guaranteed whenever you see a strong move in one direction, you're almost guaranteed a retest of that high. And then if it can push through, you'll get that symmetrical leg, right? So watch for that 1, 2, 3 symmetry, right, as we go up to the opposite side for that pendulum swing. Okay, now don't forget though, don't forget, do not mess with the range. If we don't see it explode, right? If it just kind of goes higher here and comes off, we're range bound now, buying low, selling high, right? With what we call the 2-try rule, right? 1 try, 2 try. And we saw examples of that back here, right? We go down, 1 try, 2 try, back up, 1 try, 2 try, back down. This is where we see 1 try, 2 try, continues, right? And so you can see what happens when it continues, you follow that momentum. Eventually, it will start to go back up into that range as we're doing right now, right? So if we see it go up, 1 try, 2 try, continue, find that new, right? Find that new channel, buy that pullback, you know where we're going. All right, guys, stay away from the middle, buy the low, sell the high, but right now it's buying the low, right? That's my main priority here on the Nasdaq. Why? Because that's momentum, right? And I always want to go in the direction of momentum. Speaking of momentum, how about that gold? Boy, oh boy, this gold cannot buy a bullish market right now. Gold is bearish with a wide channel this week. My plan is to keep looking for selling opportunities after the bulls try to take this higher. My goal for tomorrow is to wait for buyers to try and reverse this trend and then sell into the failure for a retest of the low. I want to point something out here to you guys. You can see, obviously, there's a channel. Right? That channel is okay. It's okay. You'll notice it could be a little bit smaller, right? It could be a bit smaller. I kind of lined it up like that too, right? That could also be your channel there, right? So you'll make sure that lines in there too. So channel's there, right? 1, 2, 3. We're almost down to that measured move, right? I also took the move up and projected it down as another potential target down there at 1243.4. We're obviously bearish. I think the most important thing though right now to understand is that we've been bearish for quite a whittle time here on this gold, right? It's been quite the bearish market. And I want you to look closely at where the best trades are coming from right now on gold, right? I'll give you a hint. It's on the opposite side, right, of where most traders are looking for trades. If you notice, every time the market goes above the moving average, what's happening? You're seeing sellers waiting up there, right, with their hands out going, give it to me again, right? Give me some more money out of this market again, okay? What you're also seeing is every time we make a run lower, right? We make a run lower, right? What happens? We tend to dry up. You know, it's almost like this trend's been going so long that nobody really sees value in selling low anymore, right? So here we have a situation, we're seeing lots of clues right now, right, that at the end of these moves, we've got to be careful selling short. What you really want to see is you want to get yourself into one of these situations where we go up. Big, strong move up, right? Buyers are going to want to try to hold it. They fail into strength into pullbacks, and you get a nice run lower, right? Watch it again. Buyers go up, right? Nice, strong move higher here. We're bullish now. No, right? Failure, strength, pullback, right? And pullbacks going back lower. Again, strong move up. Let those buyers, right? Let those buyers try to beat their chest and take that, right? And take that price higher. We know where their stops are. We can sell into those stops, bring that moving average back over, sell into the moving average, right? And keep that party rolling to the downside. The problem though is that once we get too far down, right? There's no more sellers down here because nobody wants to sell low. So the cycle resets, right? And does it again. So that's what I'm looking for tomorrow. Now, in all reality, like I said earlier, we got the EU summit right now. Tomorrow's a Friday. This could be a real quiet day on gold tomorrow. So while I would love to see this price go up, get those buyers to try, and again, the buyers have all the options they want to reverse this trend, but apparently they just can't get it done, right? They keep on failing. So assuming they fail, we'll look for that failure. That failure will lead to strength for the bears. We don't chase after that though, do we, guys? We sell, right, as we go back down, right? Selling the failure, selling the pullback. We don't sell, right, as the market goes lower, right? So that's if price pulls back. We may also, though, see a bit of a trading range. Strong move down, pull back, double bottom, and bounce. Okay, if we see double bottoms, we mark up the high between the two bottoms, and then we look to sell overhead. How do we sell it? One try, two try, failure back down. What if price keeps going lower, Joe? What if we keep grinding lower here, right? What if we keep grinding lower? If we keep grinding lower, what I'm going to do is I'm going to mark up that high, and we'll do the whole thing again, right? We'll look to go up, failure, strength, pull back, and back down, right? You just keep on waiting, right, to reset that cycle. You'll learn all about the price action cycle, by the way, inside of that free trading course, right? What I call the DNA of the price action on any liquid market, right? You trust me, that's worth its price of admission right there for free $99. All right, so with that said, right? With that said, again, grab that free course, upper right-hand corner, learn that price action cycle. How do we reverse? What does a reversal look like, right? A reversal looks like any of these that actually kept going, right? Strong move up, pull back, strong move through. It's got to keep going, right? Strong move up, pull back, strong move, got to keep going, right? Strong move up, strong move through, right? Got to keep going. If we get it to keep going, now we draw the new channel, find the new channel, and look for those buys off the low of that channel. All right. Again, it's got to be the 1, 2, 3 reversal, right? That 1, 2, 3 reversal, right? What does it start with? Strength, pullback, strength, right? That's what we haven't seen. We've seen strength. We've seen a pullback. We haven't seen the continuation. Okay. When it fails, it rolls over, back down again. That's the goal for tomorrow. All right, guys. Gold looking great. Hopefully we get some good life, right, out of it tomorrow. And then last but not least here, certainly not least, right, we get the euro. Euro is bearish and trading sideways inside a range, inside of a range, and inside of maybe a triangle, right? See it? So my plan is to look for selling opportunities using buyer failures up above the high of the range tomorrow morning. Keep in mind, though, the prior week low is just below that range. And with the end of the week tomorrow, yeah, I see you, prior week low, right? We may see a little knee-jerk lower, right? And then a V bottom going right back up again, right? So watch for those buys if we can get those, right, that kind of knee-jerk or V-bottom off of that low. We'll cover it all here. As you can see here, we're bearish, right? We are bearish going into yesterday evening, right? And then, of course, we talked about this last night, right? We talked about this. We knew that we're probably going to have to go up, right, to sell it back down again. Beautiful example there of exactly what we've discussed here so far tonight. And you'll notice now we've got some rising support, we got some falling resistance, we got some flat moving averages. It's kind of a comedy of errors here right now because, you know, again, if you watch last night's newsletter, right, we're back inside this original range, right? We're back inside the original range, but at the same time, right, we go up, we go down, we go up, we go down, we go up. There's another range, right? A little nested range. They're getting intimate inside the range right now. So we got a triangle, we got a range inside of a range. So we're definitely consolidated, right? We're bearish inside a range. What's the plan here? Sell high, right? We call this a spike and range pattern, right? Strong move down, we pull back, we go back, we double bottom. Find that double bottom, mark up the high. Now we look to sell up above those highs. How do we sell it? 2-try rule. 1, 2, failure back down. What will happen is, guys, this breakout will look very convincing. It's almost a certainty. Okay? That break higher, that's going to look like it's never going to stop. But all that matters is when it pulls back to the moving average. Right? When it pulls back to the moving average, do they explode for a 1, 2, 3 reversal? Or do they just whimper? And once they whimper, right, you know what's up. There's my failure. Bam, right back down in. Okay? And a lot of times what'll happen is it'll fail, right? It'll fail and then give you one more shot to do it again, right? Failure, pullback. Okay? Then the other option is, let's say, for example, we end up back at that low now, 1 try, 2 try. Now, here's where you've got to remember the market's bearish, right? So we can't just buy the failure, right? Like we would sell the failure overhead. Does that make sense, right? Make sense? Right? I can sell a buyer failure in a bear market, but it doesn't work vice versa, right? I can't buy a seller failure in a bear market because the momentum is too great, right? What will happen is it'll do this, right? If you try to buy that failure, what will happen is it'll trap, right, and right back down again. Okay, go back and look at the Nasdaq, look at the S&P, look at the euro today. That's what happened, right? We were below that range. If you try to just buy it, right, there were sellers waiting right above that high. It's not a great sell just yet because you haven't cleared through that range breakout yet, but it's not a very good buy, right? Not a very easy buy. So what I'd rather get that moving average come over. Where's the color I haven't used yet? Right? And then wait for that strength and then pull it back and go from there, right? And buy there. That way, if it does collapse back in front of you, right, no harm done, right? If it collapses, then you know you're probably going to be bearish. We're probably going to find a new channel here and sell off the high of that new channel, right? It's either a range or a channel. It's a range or a channel. If it's not in a range, it's going to be a channel somewhere, right? If it's not a channel, it's probably going to be a range, okay? So now as we go back to our chart now, right? Here's my range. I want to go up, 1 try, 2 try, failure, strength, pullback, right? To sell that sucker, to sell it, right? Back down to the right to that low. We go back down to the low now, right? 1 try, 2 try, not the failure I'm looking for. I'm looking for the strong move and then the pullback, right? I want to buy that one, right? I'm not going to try to buy that failure like we would, right, up at the highs here, right? So it's only one, right? Only one buy pattern here, right? Two sell patterns overhead. Now, I mentioned earlier we have, again, potential, strength, pullback, strength. That will be what a breakout looks like, right? Buy that pullback now, right to that low, and watch this range up here around 17,300 because it's another range we spent some time in that will probably be your magnet if these buyers take it tomorrow morning. I'm also watching tomorrow. There's that prior week low. You thought you could sneak in there, right? Don't be surprised if we see a strong move down, right? That strong move down, we have to respect the bearish momentum, right? So if we hold a pullback and run, new channel, right? New move, new plan, right? It'll basically be the same thing we saw, right, in last night's newsletter, okay? But I'm going to watch and see if we can get that jump. If we can get that jump, I can look to buy now, right, going back up into that range. So hopefully we do get that prior week low. And these are situations where what'll probably happen is it'll probably come down, just give it a little kiss, just a little tap, right? It'll hit the 15,800, right? And then boom, right back up again, right? It might even be like this. It might even be down and then straight back up, right? If that happens, then you know the deal, right? Look to buy that pullback, right? And you're good to go. Okay, but make sure you get a lot of strength at that V bottom as it comes off. There is also potential we could roll lower and kind of get stuck between these two levels. If that happens, you've got some trouble on your hands because nobody's going to want to sell low and there won't be enough momentum yet to go higher here. So you want to wait for it to, you guessed it, right? 1 try, 2 try, failure, and then buy back up, right? 2 try rule, 1 try, 2 try. Right, let those sellers try to sell above that range. Once they fail, bingo, now you're off the races, buying back up into that range. So that's possible tomorrow. It's not likely, but yeah, you know what? Prior month, prior week, prior month, I wouldn't be totally surprised if we saw that tomorrow morning. And again, tomorrow being a Friday, we get the EU summit, so gold and euro, right? Definitely going to be early in, right? Early out for those two markets. Oh, and one more thing. Next week we have the 4th of July, big time holiday right here in the U.S. I might just leave the office that day, right? That's how big it is. All kidding aside, I'm going on vacation next week. Because the 4th of July is on a Wednesday, it's going to be relatively challenging next week. I would imagine, they're already talking about TSA having the biggest influx of people this weekend. You put a big holiday like the 4th of July, the Independence Day holiday, on a Wednesday, and everybody and their pizza guy is taking that week off, right, Monday through Friday, just to stretch that sucker out. If you do choose to trade, make sure you visit the CME website, because markets will be closed on Wednesday, but they're going to be a half day, right, on Tuesday. So it's basically going to be Monday, Thursday, or Friday next week if you want to trade next week, right? Monday, Thursday, or Friday. Be very careful Tuesday, Wednesday, and then again Thursday, Friday. If I had to guess, I would guess Monday and Friday next week are going to be the bookends, right, for that holiday shortened week. Also, too, no newsletter next week. All right. I know. I always hate to leave you guys right hanging. But again, come out, learn the strategy, grab that free trading class on our website, right? Or heck, take the dive, right? Let's go face first. Let's do this, right? Actually learn the strategy, right? Let me teach you how to fish, so you don't need to rely on me, right, to cast and reel those fish in for you every day. No matter what, though, I'm going to be here, right? If you have any questions, you can always call, email, find me on Skype. You can always use live support. I'm not going anywhere. You got to be a little bit cuckoo to leave Los Angeles in the 4th of July weekend, right? It's not exactly the easiest place to get around. So I'm staying local, right? I'm not going very far. So I will be here to answer questions. I will be here to talk to new clients, right? I will be here to help you guys out if you need my help. So don't be afraid to put questions in the comment section below, right? But I will be taking next week off. I get some good books. I got some great family coming in town, and hopefully we'll have some good weather as well. So guys, if I don't see you guys tomorrow morning in our trade room, 8 o'clock Eastern time, the next time I see you, I can't believe it, right? It'll be in 2 Mondays, right? That'll be July the 9th. So again, careful next week, right? Be well out there. Be nice to each other. Be careful with those fireworks, right? I know they're making them legal now in a lot of states right now. Make sure you come back with all of your fingers and toes, please. We need those digits to be great traders. You never seen a great trader missing a couple thumbs, have you? Probably not, right? Probably not. So make sure you come back with all those digits and have a great holiday if I don't see you guys in the trade room. As always, my name is Joseph. Be well out there. Be nice to each other and be here next time. Adios, amigos.